Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello everyone, it's Dan back here doing weekend analysis. Thanks for welcoming James. By all means, continue to give some feedback. He's open to it. And he is going to only get better and better as he continues to talk. If you were to listen to my first videos over a year ago, they're pretty pathetic compared to now. So he'll get into his flow. And again, it's that feedback that helps him to know how to hone in and get better. So I'm going to continue to do these videos on the weekends, and he's going to have Monday through Thursday covered. But it's going to give a nice dual comparison in terms of different opinions and analysis, because we don't look at each other's analysis and we don't converse with each other. We try and remain as unbiased as possible in that regard. So you are getting two completely separate opinions from each other when you are getting both of our analysis. So starting with oil, we have a very clear dump. And I admittedly, in my videos recently, have been bullish oil mid and long term. And I'll cover that mid and long term here in just a bit. But obviously the short term, completely breaking the uptrend for the bulls and a big time setback. So the one thing that we never saw for the bulls was a close above $54, and that's the level that I keep talking about time and time again. But this weekly chart rejected from $54 1, 2, 3, 4, 5, 6, 7, 8, 9 times, never closing above it. So in that regard, it was nice that we never got a fake out signal closing above $54 and then having an all-out dump. So we never broke that resistance on the weekly time frame, and it is very clear that that level has to break in order to see any kind of further upside. But that's a long way in the future for now, because we have the bears in full control. So let's look at that daily time frame. And what were a couple of bear signals? First off, we had a very bearish reaction to the inventory report. We had bearish news fundamentally out of India. But what stood out to me, and in the last couple of videos that I did do before James took over, was this bounce. And I was pointing out we had a dump and a 2-day strong bounce, a dump and a 3-day strong bounce, a dump and 1 day with no follow through. These were indecisive candlesticks. They did not confirm the bullish reversal candlestick, and we saw profit taking before the end of the day both times with upper wicks. So this was a red flag right here. The lack of a follow through for this bounce definitely was a signal to be cautious bullish. And then here we have a couple more signals. Losing the uptrend line was a big red flag. And of course, breaking the higher low pattern. As soon as we broke 51.25, that was the floodgate opening, so to speak, with the bears just all out taking over. And at that point, we had already been dumping for a significant amount of time, and then it just continued to the downside. So what this situation does create, and admittedly, I'm a day trader, and I'm just looking to lock in my consistent gains every day and be able to maintain a steady amount of income day trading. So when we get these kind of events that don't really happen often, and some of these events like the 4-hour RSI on oil at one point was down pretty much right at the lowest level it has been in 2 years, I'm going to miss some profit to the downside, and that's admitted. And if we look at the hourly time frame, an example of that, let's say on that all-out dump day, if I made a bearish position, I would never swing that bearish position into the next day with the hourly RSI down at 6. That's just not something I would do, because 9 times out of 10, more than that, 19 times out of 20, we're going to see some oversold bounce overnight, and we did, but it led to further downside the next morning. But the RSI, I'm going to use these indicators that consistently give gains by using them, and I'm going to miss some of these, once in a year, once in a couple year events. I'm going to leave money on the table, and I can accept that to stay consistently and to be able to make money using these indicators when we don't have these crazy events, when we're nice and contained and we see price action that is not out of the norm like this. So there are people that, are disregarding RSI and hitting this home run and swinging oil bearish and making a lot of money on this move. But in the long term, if they're going to be disregarding RSI for an entire year of trading, they're going to lose more than they win. So the bears are in full control. Let's get back to it here. We've never broken this lower high pattern on the hourly time frame. And every time we see a dump and the RSI gets oversold, we see a weak bounce attempt, a lower high is set. So we've got resistance here at 50.81. We dump again to lower lows, a bounce attempt, resistance at 50.12. We dump again to lower lows. We build a base. Looks like the bulls are going to get this oversold bounce underway. What was that last resistance? 50.12. Where did we top out this morning? 50.09. 3 cents lower, dump to lower lows. So unless we can break, this is the level now, 50.12. 50.12 and 50.09, the bulls have to break that level to prove anything to me in terms of turning this trend around. In terms of support, where can we look? We have to zoom out back to the daily time frame and zoom back to some levels here. I'm looking at this price action that was previously resistance back in November as where we are trying to find some support. So I'm looking at 48.48 and 48.40 and 48.23, some previous resistance trying to act as support, and we're at 48.29 here at the low, 48.36. So we are right in this price range, and if we don't hold that level, there is not a lot of support until down into the $46, $45 range down here. So the bulls really want to see this bounce begin to play out. The daily RSI is oversold at this point. This is the most oversold the daily RSI has been since the start of 2016 when this bounce started. That was the low that we had seen. So that was a very low RSI. We saw a big time bounce off of that low RSI. So we can be looking for an oversold bounce to begin developing early next week. And let's see, what else did we want to look at here? Let's look at USO. USO formed a bullish reversal hammer on Thursday and saw absolutely no follow through today. But that candlestick alone would absolutely have me out of a bearish position. Again, like I said, going with the odds of what happens more likely than not, 19, well, maybe I'm just making those numbers up, let's say 8 out of 10 times, 4 out of 5, whatever, bullish reversal candlestick, we see follow through to the upside the next day. So we didn't get it this time, and anyone that ignored that bullish reversal candlestick continued to make gains, but if you ignore that candlestick throughout a year, you're going to end up losing. So we had lower highs and lower lows. The lower Bollinger Band resistance is continuing to drive the price to the downside, and we're closing near the low with the bears still in full control. Where was the red flag and the bear signal on USO? It was here on this break. The lowest price that we had seen in over 3 months was 11.04. As soon as we broke that level, you can't even find support here because we haven't hit this price in so long. So we have to look at the weekly time frame. Where is support after 11.04? And we were looking down at the next level down here, really $10. So that's why we're dropping so easily. We saw a really big move to the upside, and let's look at that on oil. This is the range we're at right now on oil. Look at this big bull move to the upside. We saw 2 days on oil. Remember that huge breakout where we went from $45 to $52 essentially in 2 days? Because we built no support on the way up during that range, this is why it's so easy for the bears to dump through with the lack of support here. So a huge move to the upside makes it easy for a huge move to the downside, taking back those levels. So same thing with USO. As soon as 11.04 breaks, that's the lowest price we have seen in 3+ months, and there is a lack of support. The next level after 11.04, the first one was 10.81, and that's just a previous resistance level. We dumped right through that, so a lack of support leading to downside momentum. DWT, look at this breakout. Upper Bollinger Band rejecting the price 1, 2, 3, 4, 5 times. Huge move through it, close above it, full-on breakout mode. Highest price that we had seen in 3 months, 25.41, 25.59, break of 25.59, and here we are seeing big-time moves to the upside. But again, this was a clear bearish reversal inverted hammer. We did not confirm it, and we saw further bullish follow-through, but this definitely faked out a lot of people, and we saw a lot of profit-taking on DWT that day. But the bulls are still strong. They're in control. As long as we close above the upper Bollinger Band, we remain in control. We just have to keep in mind oil is oversold. Last time we were this oversold on the daily time frame, we saw a big bounce, and we've got overbought conditions on DWT with the 5-minute, or the daily RSI, I should say, is up at 77. So that's what we got heading into next week. We need a bullish reversal candlestick at the bare minimum on oil, and we are currently looking for a break of the lower high pattern on the hourly time frame. So bears still in full control. Let's look at the longer term time frame, as I did make some statements about what I think oil can do here in 2017. Longer term trend is still intact, so we can't disregard that. It would take a break of 42.23 for me to scrap the bulls and say the bears have it. Because if we look back, obviously we're in a downtrend overall, but we started to break this downtrend by breaking the lower high pattern. We started forming higher lows and higher highs. The next very key resistance level for me was going to be up in the upper 50s, low 60s. This is absolutely a setback, and it's going to take a lot longer for the bulls to recover if they're going to recover. But I just want to point out that this weekly time frame, this bounce from the start of 2016 is still absolutely intact, and we could pull back all the way to $46. Really, we could pull back to $43 and still be forming higher lows. So we need to keep that in mind. Over the past year and a half almost, let's call it a year and a couple months, we are in an uptrend. Overall, in multiple years, we are in a downtrend. So depending on the time frame you're looking at, the perspectives are a bit different. But as far as I'm concerned, on this bounce, still playing out from the start of 2016, we are still in control by the bulls as long as this higher low pattern does hold. So we'll see what we get on Monday. Scouting that bullish reversal candlestick, looking for a nice bullish entry in oil for a short-term swing trade, but not ready just yet. Thanks for tuning in. Keep that feedback coming on, James. We'll see you soon.